614 Startups Nation, welcome to another episode of the 614 Startups Podcast. My name is Elio Harmon, and my mission is to help you attract the clients and access the capital you need to build your dream business. Like a good guest, wipe your feet at the door by hitting the subscribe button and welcome in. All right, today we're going to be talking about angel investing, and hanging out with me is one of my favorite entrepreneurs, investors, and now fund manager, Cindi Englefield of Accelerating Angels. Cindi, welcome to the show.
Thanks, Elio. Good to be here.
All right. The thing about this show is that we get right down to business because the listening audience wants to know all about you and about Accelerating Angels and how you guys are working to help them build their dream business. So how did you get your start in business, and what drives your passion for helping female entrepreneurs succeed?
Well, I grew up in an entrepreneurial family and got the business bug very early. But eventually I got to start my own business. From my dining room table, I started an educational publishing company, and grew that over 20 years until I sold it. And so that allowed me the experience to actually to start a company, grow it, sell it, all aspects. I wore a lot of hats. I was a member of the Women Presidents Organization and National Association of Women Business Owners, which gave me a lot of support. I had my first check. My only check was an investor of $5,000 to help me get started. So I had an angel early on. So I know how important accessing that capital can be to a business startup. And I was lucky that my business was profitable and I was able to fund it with the profits from there on. But I learned a lot of the ups and downs of businesses and the people that my friends that I met in Women Presidents Organization and other, and NABO, I learned a lot about them and their industries and their ups and downs. So I was able to kind of go industry wide with my learning as an entrepreneur because of those relationships that I had with other founders. After I sold my company, I joined the WSBA board, Women's Small Business Accelerator in Columbus. And so I've been on that board for 10 years. And really one of the things that the founder, Mary McCarthy, and I have noticed often and talked about often is about how women have barriers to accessing capital. So it's always been on our minds to how are we going to help women get a bank loan, lines of credit, an angel investing if they're on that venture track. So when we heard that less than 2% of venture capital went to women founders, we decided that we had to do something. So I've been an angel investor, Elio, for probably 12 years. And, so I've been an entrepreneur, I've been an angel investor, and I know what I look for in a company, and I know how it is to try to, grow your company without capital. So from all that it's kind of all come together to the point where we launched Accelerating Angels. So that's kind of our story where we are. And, we decided to raise a fund because we wanted to pool our money together into a big fund and write bigger checks. My check sizes were very small, but if we pool our money together, we can write bigger checks. And that's, I think, the only way to change that and make it more equitable for women to access capital is to have people like me. And I've seen a trend across the United States of other groups of men and women, angel investors, focusing on female founders, because truthfully, I think that you kind of de-risk your investment just by the fact, a little bit at least, by the fact that you're investing in a female founder, that they run great companies, have great business cultures, they collaborate, and statistically, they return 35% higher returns to their investors and exit faster. So I think it's a pretty good bet that we have going. Our fund is going to be a $3 million fund, and average check size is $100,000.
Wow, that's a big jump from 5,000. And I really like the entrepreneurial approach to seeing a problem, solving a problem. I really like that. But when you got your start, I feel like maybe you had a certain experience, but then as you've worked with other female founders, they've shared their experiences with you. What are some of the things that you feel were unique to your experience getting started? And then what are those common things that you hear from members of the WSBA as they talk about their experience in business?
Well, I think women entrepreneurs, female entrepreneurs don't have the large networks, financial access networks that their male counterparts have. We multitask. We have families. We have dinner to put on the table. We run our business on top of that, and I think that we're just not out networking in those environments that men have more because of the gender. They have more of an opportunity like that. So we see, and also confidence. Women don't raise their hand quite as quickly, and I see a lot of women raising money, but they're not raising enough, in my opinion. They're afraid to ask, and ask for more. So there's just some of those barriers that they have to overcome. So that's really, one of our focuses, both at the Women's Small Business Accelerator and now with Accelerating Angels, trying to get the women, help the women overcome some of those obstacles that they maybe even self-inflicted obstacles like imposter syndrome and things like that.
Yeah, it's kind of that feel the fear and do it anyway, right? Where some of those things are like guys probably
Yeah.
have a similar sense, but they do it anyway. But females are maybe a little bit more introspective. Guys are just like run through the wall and we'll figure it out later. But I completely understand, and I've heard kind of anecdotal stories about that and that being an issue. But I know there are broader issues also, and they kind of rears its ugly head when it comes to wage gap, even for non-entrepreneurs and people at the time of negotiation, right? You get that offer. Do you always negotiate? Do you have the confidence to really ask for what you're worth? So you've told us about Accelerating Angels, but I want you to give us that elevator pitch again, because we know the fund size now, right? So the goal is $3 million. We know your average check size is going to be much bigger at about $100,000. But give us the elevator pitch one more time. So the problem that you're solving, who you serve at Accelerating Angels.
Well, we're serving our investors because we want returns. I don't think any of our investors, our 20 investors so far that are in the put money into the fund, are looking for. This is not a donation. This is an actual investment group. It just happens to be led. We're investing in women-led companies. We want women founders. Multi-gender is fine. Mixed gender is fine. We want the women to have at least 30% equity in their company and to hang on to that so that they get wealthy in an exit. So our investment thesis is the women owned 30% or more equity, $100,000 annual recurring revenue. We want them to be a tech company or tech component. We feel that technology it gives you them the ability to scale quickly, like that you need to scale. And investors, even though angels are patient investors, they will wait the 7-10 years for their return, but they do want a return, and the quicker the better, so that we can reinvest into other companies and help more entrepreneurs succeed. So those are kind of some of the criteria that we look for, but we are looking for the same thing any venture capital company is looking for, and that's an exit in a multiple that's a unicorn status. But we're realistic, knowing that some of them are not going to give us those kind of returns and probably go out of business.
All right. So I heard a couple of things loud and clear. It's at least 30% female ownership or woman owned. You like tech because you're able to scale quickly. But you mentioned something I want to dig into because I know my viewers are going to want me to ask you this. You said recurring revenue. Did I hear $100,000? So when they're pitching you, you like to see that number for recurring revenue for the companies that you invest in. Is that right?
That's correct. The reason
Okay.
is this, I'm a first time fund manager and a female fund manager. And so I got a couple barriers myself to get over. And so we want to have a fund that has best practices, 20 or more companies in our portfolio, diverse industries. And I feel like the way to be successful quickly so that we can raise the next fund that's even bigger and write bigger checks is to get those on that traction and revenue up front. We don't want the idea stage companies. We need to see some traction and be able to interview customers and see, is this actually reoccurring revenue? Are you going to buy it again? And how quickly, how big's the market and how big, what's the opportunity there and how quick we look at things like, can somebody else duplicate this quickly, easily, those barriers to entry. We want that reoccurring revenue, and that's pretty much a game changer. It's our minimum is $100,000 annual recurring revenue.
Hey there, 614 Startups community. We're thrilled to share some exciting news with you. This podcast is proudly supported by Loop, the game changers in return management. Not only are they revolutionizing e-commerce, but they're also on the lookout for talented individuals to join their dynamic team. Looking to be part of a company that values innovation and fosters a vibrant culture? Well, Loop is the place to be. Check out their open positions at loopreturns.com/careers. And here's the scoop. Loop has been recognized by Forbes as one of the next billion-dollar startups of 2023. Want to be part of a success story? Now's your chance. Don't miss out on this incredible opportunity. Head over to loopreturns.com/careers and be part of something extraordinary. Loop, where innovation meets success. Apply now. This episode is brought to you by KJK. Tired of the billable hour? KJK has a solution. The KJK GC Advantage program offers businesses comprehensive legal services in the areas of employment, corporate services, real estate, trademark, intellectual property, and estate planning, all for a set monthly fee. KJK serves as their clients' partners in business, not just their lawyers. Along with cost certainty and predictability, the KJK GC Advantage program gives clients peace of mind, knowing their projects will be handled quickly and efficiently, maximizing the return on investment on their legal spend. So don't go it alone. Let KJK help. Learn more by visiting kjk.com. Yeah, ladies and those mixed gender founding teams, don't get discouraged.
Nope.
Don't turn off the podcast yet, because just because she needs that number in order for you to kind of meet the minimum criteria for investment today, it's not always about engaging with the investor or founder engagement with the investor when they're actually ready for the check. How are you having conversations with those female founders who might have the tendency, once they hear that, to disqualify themselves, to keep them engaged until they get to that $100,000 check, right? Those early female founders who want to get to that first check from Accelerating Angels, what are you saying to them? How do you like to get engaged with them to keep them in your funnel?
Well, we use a platform called dealum.com. And Dealum has a way for us to say, park them in the too early. And so we encourage them, even though you don't meet our minimum, please give us regular updates, keep coming back and updating your application within the platform, and just stay in touch with me, because it doesn't, just because they don't meet the criteria doesn't mean no. It just means they're just too early for our investment portfolio.
Now, let's say you have a team and they come into Dealum. I would venture to guess a Columbus-based, female-led company that's doing $100,000 a year in recurring revenue. You may not necessarily be their first check, or maybe you might be one of the first checks. So educate us on angel investing and where you guys really fit in the investment cycle. At what stage, or can angel come in and be part of a seed round, a Series A round? Where does the angel round really sit in that funding continuum?
Well, we don't do typically pre-seed because they don't have the reoccurring revenue that we need. So we're pretty much investing in seed to Series A. And you know, I quoted that statistic that everybody's heard, that venture capital invests less than 3% or whatever in female founded companies. And you know, that's okay. I think that's where angels have an opportunity, especially, you know, for our focus, of course, on female entrepreneurs and startups, that they come in at that stage where it's, you know, I like to say it's that little valley of death, that first few years where you're actually selling something. You've got a minimum viable product, and you've product market fit is there. You're now selling it, but you're, you know, I like to use this example. Say you're you're manufacturing a product, and you get this big, you finally get into Walmart or something, okay? And then you don't have the cash to produce the inventory, you know, that before, and because you're not bankable, you know, you can't get the line of credit yet. You know, you're just too early for all of that to be in place for you. So angels can come in there and give you that little injection of cash, and they also will be hands-on and experts in be connections for you to acquire the next customer, to help you hire the next the first CMO, marketing officer. So yeah, they come in at that stage, right? And venture capital will come down into that stage too, if you know, all the stars align. It's just that we're those investors that come in after friends and family, after that initial startup stage, before you're really, and really we want to help them scale to the point where they are going to a Series A, and they're venture backable companies. Venture capital difference between venture and angels is we write smaller checks, but we're more hands-on, not controlling, but helpful.
Yeah, that's a great explanation, Cindi. All right, so let's jump into some of the keys. So let's say you're a female founder out there and you find yourself exactly in this position, right? You've built some kind of logistics technology, and it really helps streamline like Walmart's delivery process or something. And now this is like your first big client, but in order to deliver it, you need to scale up your software team or something like that. So, what are the keys if a female founder finds herself, or a founding team finds itself in that scenario and they want to go out and raise capital from accelerating angels? What are those keys, right, that you like to see when they walk in the door that makes time from pitch to check a lot faster?
Well, I think, you know, having the well thought out roadmap to where you're going, to know not only, you know, where you're going with your product roadmap, but your funding roadmap. You know, do you know how much it's going to take you to hit these milestones so that you can go into your next round and ask for bigger checks? You know, if it needs to be well thought out and planned, and you know, we need to know a lot about the competition. We need to know who else has invested. You know, that we look at, you know, are there other angel groups that are in, and who are they? And by reputation, are they the ones that, you know, we want to be on the cap table with? So, you know, I think it's that roadmap. You know, if they have a really clear idea of where they're going and what they're going to need, what kind of cash it's going to take to get there. One of the things that really disappoints me is when I get an application where they, you know, you want to know the problem and their solution. And if they can't explain what the problem is, and how they're solving it, and what their company does to solve the problem, in really clear language, it's really hard. It's a really easy to say no, you know, and move on. So I would say definitely make sure you define the big problem that you're trying to solve in the world. and then your solution very clearly, and what it's going to do. Is it going to save people time, money, lives, the environment? What's the result of to the customer and to the world? If it can't be clear, it's hard.
Yeah, give us something to hang on to here, Cindi, because you've looked at a lot of pitch decks, okay? In my audience, they like specifics, okay? So when you say clear, give me an example of a pitch or a conversation that you had with a founder where when they gave you that solution statement, you said, "Oh, wow, where do I sign?" Give me an example, a concrete one where you felt like, "Oh my, yeah, they really, really know what they're doing here."
Oh, I don't know if I can. I can tell you the opposite. I can tell you what.
Let's go with the opposite. We'll back into the the other side.
We've invested in.
Okay, all right. So maybe you could give me an example of one of the companies that you've invested in, maybe what their solution statement was, and why it made you a believer in what they were trying to accomplish.
Well, we've invested in two companies. Sure Impact is a SaaS program, does social impact reporting and management of the data. Very socially conscious company, and that it was pretty clear what they do and what their purpose was. And then we invested in Group Eyes. We've only invested in two companies so far, so but went through 200 applications before I got to these two. and they do meeting management. Meeting planners and corporate meetings of all sizes, whether it's a convention or corporate convention, or if it's just a meeting planning. And they do travel, hotel, and meeting space. And they are overcoming the competition. They're high growth and probably will produce a pretty quick exit for us in the next 2 or 3 years. So we really thought it was very clear. They, people need to meetings. Their teams, they can save them a lot of money. They showed exactly what problem they were solving and how they were going to solve it. So that's one example. But there was one recently that I read it and I'm like, it's a highly technical company. Okay, they do technical, high above my intellect and comprehension stuff. But if they can't talk to me as an investor very clearly, and it's above my head technically, for the common, everyday person to understand what the problem is and what the solution is and how it's going to help the world, then it's really kind of I pass. They went above my head. You have to come down to an investment person. Like, why would we invest in this solution? And, how is it going to make us money?
This episode is brought to you by Rev1. Rev1's mission is to help entrepreneurs build great companies. As you navigate the waters of business entrepreneurship, you don't have to go it alone. A strategic partnership with Rev1 connects innovators to the talent, customers, space, and funding you need when you need it. Get started with Rev1 Startup Studio by visiting rev1ventures.com to learn more. Again, the website is rev1ventures.com. Support for the 614 Startups podcast comes from Nationwide. Nationwide's mission is to protect people, businesses, and futures with extraordinary care. To help fulfill that mission, Nationwide is looking to invest its $350 million venture capital investment fund in insurtechs that will help them create new and exciting products and solutions to meet the needs of their customers. If you're interested in partnering with Nationwide's venture capital team, visit nationwideventures.com to learn more. Again, the website is nationwideventures.com. Nationwide is on your side. Excellent example. Sherry Chaney Jones is a friend of the show, former alumni on the show. And yeah, Sure Impact to this day. My conversation with her has to be about 2 years ago. And she also did Pitch Columbus. And if I recollect this accurate, Sherry, don't kill me if I get this wrong. But the problem that she's trying to solve is that there are nonprofits and government agencies that get funding to make an impact. And a lot of times they have a very, very hard time demonstrating that impact. What Sure Impact does is through analytics and data, they're able to easily and quickly demonstrate impact. And by doing so, the nonprofits can get more dollars, the government agencies can get more dollars in by demonstrating impact, and that's worth something, right?
And
So that's
helps more people because they're successful nonprofits and their mission gets, widespread, and it's all good. Yeah, it's a great company.
Yeah, awesome. So Sherry, big shout out to you from your investor. Okay. So next thing you mentioned something and I caught it there. You're not only evaluating that solution statement, making sure it's clear, making sure they understand their competition, making sure they understand what it's going to take to hit the next milestones in order to get that next check and keep growing. You also mentioned you guys are evaluating who else is on that cap table. So how should female founders be thinking about potential investors and who they take checks from? When you're looking at who else is on the cap table, you mentioned reputation as well. Buyer beware, right? Easy money is not always good money. What should female founders be thinking about?
Well, they should definitely look at people that investors or investor groups that have the similar values, and they're likable. You're somebody that you would like to have on your cap table, and also like-minded. I think industry expertise. Maybe you want advisors that can open up, or advisors, but investors that can be advisors and have expertise. I don't know. I've had, here's an example. I had one company, I won't say who it is, open up a round just specifically for us because they wanted our support. That on a mostly female, we have men in our investment group, fund too, but they like that support that we could give them as a mostly female and female focused, female, like-minded organization. I've had several companies, keep their round open just for us because they want us on their cap table. And what I look for is, there's companies that have been around for a long time, like Golden Seeds out of New York, that's been female focused for a long time. And when I see them on there, I'm like, I trust their due diligence. I trust their investment knowledge. And so I like having them. And Queen City Angels was lead investor for Group Eyes. And so I liked having a Cincinnati angel group on the cap table. So I think that females should find female focused networks that will open up good networks for them for investment. That's probably my advice.
What's a good source of research for that, right? Because it feels like the investors might know who they'd like to invest with. You name dropped a few there, like Queen City gives you confidence. The Golden, what's the other one out of New York?
Golden Seeds, yep.
Golden Seeds, like you guys know this. How do founders get the insight? I mean, is there a credit report, right? A reputation report for investors? I mean, how can founders also educate themselves? What are some telltale signs, right? I mean, do they talk to other founders, which I know happens all the time, right? Before you take the check. Do you have any tips there?
Well, yeah, there's DLM is a great community, the platform that we use. And Angel List and Gust and Seraph. There are some platforms that bring together investors and founders. I think it's free for most of them, if not all of them. It's free for founders to go on there and put their profile together and application information and start searching for companies that invest in the industries that you're in, or the focus that you're in. So, and then just ask your other investors for other groups, and introductions to other groups. It's another way to go about it.
Yeah, awesome. Well, Cindi, you guys, I have to give a big shout out and a big thank you. Accelerating Angels is a citizen supporter of this podcast. So all of this content wouldn't be coming to you without their support. So they're definitely not just looking to invest, they're also looking to support the local ecosystem. And whether or not you're ready to get funding or not, get in their funnel, get engaged with them. So if you have anybody out there who's interested, right, a female founder, founding team, and they're curious, how do I get to become part of the WSBA? Or how do I get access to Deal? Lay it on us. How do people get in touch with you?
Organizations that I'm associated with, I can share. WSBA, their website is wsbaohio.org. They have programs for, I would say, more the lifestyle or family businesses, the idea from idea stage to scale and grow. But they may not necessarily be in the going venture capital route and angel route. They've got programs that'll help support women business owners. So it's a great resource for our city and our state to have. And then Accelerating Angels, if you're in the venture mode and you're in startup mode and you're taking on capital in exchange for equity, and have a plan to exit in 3 to 5 years, you should contact us. Go to dealum.com, fill out an application at Accelerating Angels, or you could go to our website and access an application through Dealum that way at acceleratingangels.com. We have a couple events coming up too. The Women's Leadership Conference every year, Brady Ware does that for Business Better Business Bureau, Women's Small Business Accelerator, and I think another organization, I forgot, NABO. And so that's coming up on June 7th. So that's a great place for networking and it's a really inspirational conference here in Columbus. And then we have a new startup, a pitch competition coming up called Fund Her Biz. Startup Showdown. We are working on a date in July now because we've gotten lots of interest, and we're trying to. Actually, it's the first event, so that you want some good planning behind it. It's going to be very exciting. We're getting some celebrity judges to judge the pitch competition, and it's going to be both for lifestyle, family type businesses category and also a startup category. And it's for any women business owner in the state. So if everybody wants to follow Accelerating Angels on Instagram, Facebook, LinkedIn, and keep your eye out for that event. It's going to be a fun event in Columbus, and who knows, we may take it on the road.
That's awesome. And I'm so happy that Accelerating Angels is getting into events because, like you said, one of the issues is building networks. Whether or not you join WSBA, which you should, whether or not you get into the Accelerating Angels funnel, which you should definitely be going to their events because networks do matter. All right, Cindi, anything else you want to touch on? What's next for Accelerating Angels? Anything that we missed you want to bring up now?
Well, yeah, just my big picture goal is, my overarching goal is really to educate more people about what angel investing is and for them to get involved, because these founders need angels, and it's an asset class that not everybody is familiar with. So we do some educational events. We do some webinars and in-person angel investing 101 events. So you can also look for those if you're interested. We're a really fun group and a safe group to get started. And investing in a fund is a good way to not have to make all those scary decisions yourself and especially if we're a little bit risk adverse. So we're a good friendly group to get involved with. So look for those kind of events, and you can learn more.
Yeah, and listen, Cindi cares about your money. One of the first things she said is, this is not a charity. We're looking to make you money, all right? So join those events. Cindi understands her fiduciary responsibility, and she wants to make you a return. All right, Cindi, thank you so much for coming on the show.
Sure.
this is my one takeaway, all right? So as Cindi was going through her presentation, she mentioned that she looked at over 200 deals and they invested in 2. That's a 1%, right, chance. And one of the things that she said is if it goes over her head or there's lack of, important word here, guys, clarity, you might miss your opportunity. You're playing in a game with those kind of odds. And don't miss out on your opportunity for funding because you don't spend the time getting clear on your solution. If you take nothing else away from this podcast, work on that. All right, folks. Thank you for joining us on another episode. Until next time, peace. That's a wrap, folks. You can find this and all our episodes on our website, 614startups.com, Apple Podcasts, Spotify, Anchor, and all your favorite podcasting platforms. Don't forget to subscribe and write a review. If you'd like updates sent directly to your inbox, you can sign up for our weekly newsletter on the website. To engage in the 614 Startups community, follow us on LinkedIn, Twitter, Facebook, and Instagram at 614 Startups on all platforms and join the conversation. For sponsorship opportunities and collaborations, email us at info@614startups.com.